We're back for the second part of law on property valuations this Friday afternoon. Let's have a look at compensation. That is section 12 of the Expropriation Act, people, and as far as I'm concerned, that's the most important part of this whole scenario here. Because as I said, we're going into elections. Everybody's talking about land with compensation, without compensation. So I feel here we are putting you in the picture of what is the reality in terms of our law and statutes. Good, so section 12, and you can go back to the act that we've done according to with the revision test, where we sort of, every sentence there was like a question. You can go back through that to sort of refresh your memory. But I want you to take away from that is that the basis for compensation according to the Act is market value of a property. You know your definition so that you know what market value entails, the estimated amount after a reasonable period of marketing between willing buyer and willing seller. That is where our first problem came in with market value for expropriation, because we are sitting with an unwilling seller. And then obviously nobody is also against selling or buying under duress. So that was the other one. Good, so market value plus an amount to make good any actual financial loss. So this guy has got orchard full of whatever, apples and pears, and expropriation happens and that whole harvest or what is lost. So the Expropriation Act said we will compensate him for that loss of income for that year. Actual financial loss. So it's those two. And then also, as I said, just as a little sweetener, solatium is also there. Remember that 10% of the first, 500 or something like that, 3% between this and that and so forth. But yeah, as I say, people, in the end, it's not a lot of money that's involved with regards to solatium, so it's actually just a little, we're sorry, but yeah, not too sorry. Fact of the matter is you will not be compensated for the fact that this property is taken against your will. Okay. And then there was that court case with regards to one or the other college. Remember they had a bit of problems there because the base of their case was wrong, and they should actually have claimed the depreciated replacement cost as their market value. Because what they claimed is they said it's going to cost us X amount to duplicate the property somewhere else, and that was the compensation that they were looking for. Whereas because it's a college, we will value it based on depreciated replacement cost, because it isn't a brand new building that's being expropriated. And so obviously if there's not a market for a property, like this farm, you can value comparable sales like you just did with regards to whatever is on the farm itself, and the infrastructure and the buildings you will do a depreciated replacement cost on. Okay. Good, so that is then the basis of compensation in terms of section 12 of the Act. Okay. Then I somehow called it rules. Section 12.5 has got about 7 rules there. I've sort of listed here the 5 important ones, but you can refer back to the Act for all of them, where it says no allowance will be made for the fact that this property is taken without the consent of the owner. So it will be just straightforward market value, according to the definitions of market value. The fact that this property that is expropriated, say for instance, for an airport, so we have one nice flat land or something, minimum earthworks and things like that, that is also not taken into consideration. If the open market would not have given you anything extra for the fact that we have kilometers of flat land here and the rest of the area is sort of hilly, then compensation according to expropriation will also not pay more. Okay. Good. Unlawful enhancement will not be compensated for. Okay. Spoke about it. Say for instance you have a guest house running from your property, but you're not licensed to run a guest house according to the zoning of the municipality, then you cannot now do a market valuation on that property as if it's a guest house. It will then be just an ordinary residential property. Okay. Improvements made after the notice of expropriation, the day that ownership goes over, will not be taken into account. That is again so that people cannot now hurriedly put up structures and want compensation for that. Okay. And then lastly, unregistered rights are not allowed. Okay, it's not even taken into consideration. Okay.
So couldn't it can be something put up after the notice of intent. It needs to be before the notice of expropriation.
It looks like that, yeah. But now I think, help me out here, what can you put up that will have more value in a couple of months' time than just replacement value or so, Yeah, but in any case, there might be something. Okay, so please have a look at those rules, There's, I somehow called it rules, but there's about 7 of them. I just want to see these sort of last ones, yeah?
On a farm, if you have, what is weiden in Engels?
Pasture, is it pasture?
Yeah.
For cows or whatever,
Then the land will be like 10,000 rand per hectare, but if you have lands that you can
cultivate,
then it will be 20,000 rand a hectare. So if
I
give you a
see.
notice and you take your tractor and you plow your whole farm, you can get double. I don't know. They'll get.
Farmers are clever.
They will use.
they will use the loophole.
I don't know.
Sure. Yeah, and I mean, I remember many years ago, as I say, we have a farm valuer in our office, and I had to do, it was actually more like a clay factory, or clay mining activity, but they also owned a small holding next door. So the farm valuer was too busy, so I said, not to worry, I'll somehow go and inspect it, because it was actually just more like a lifestyle little farm. So I said, I'll somehow write the report and everything, you can now just do the valuation part of it, comparable sales. And I also wrote, with a little apple orchard and my description. And then he phoned and he said, listen, did you actually see any apples? I said, no, just looked like an apple tree to me. So he said, well, there's sort of, what you call it, experts, that wouldn't be able to differentiate, say, between an apple tree or a pear tree or whatever the story was, And here I come and I say, no, it's apple orchard or whatever. So perhaps, there's other valuers that would know, there's no ways that you are going to get anything growing, in this newly cultivated, land, because the soil isn't conducive or something like that, So hopefully we will have experts that would know, that this is a little bit of a trick here or something, Okay, so something, where the other stories was about any enhancement or depreciation to the property based on anything that government themselves have done. Like, say for instance, they built a bridge over the river. Now you can get easy access to the town, and that increases the value of your property. So one of the other rules says, but you won't be compensated, or that will be sort of deducted from your compensation. Okay. So have a look at those rules, because those rules is exactly the same in the bill. So they've taken it exactly like that, like that, and so make sure you know what is then those sort of exceptions where you will not get that compensation for. Okay. Good, that is then the Act. Then section 25 of the Constitution says compensation must be agreed upon or decided by the court. Short and sweet. Okay. Then they also say that compensation must be just and equitable, reflecting a balance. And here it comes in those 5 relevant factors that they say you cannot just stand on market value alone. We have to look at what the state has invested in that property with regards to any subsidies or very favorable loans or things like that. What is the history behind this property? What is the purpose of the expropriation? We need all of those factors, and then we will, then we can sort of calculate what the compensation should be, what we then deem to be just and equitable. Yeah. So that is at the moment the biggest difference between the two. The one just says market value, finish and plow, and government is, and I can understand where they are coming from. No, let's face it, you are not sitting with a willing seller, so you obviously want to sweeten the deal for him. No, okay. So yeah, make sure you know about those 5 relevant factors that will then on which the bill will base their value on. Okay, so the valuation is then twofold. It will be, here's the board. I sort of just want to give you this, kom maar, I'll take my head. Okay. Okay. I just want to show you, you will see in this Property Valuations Act, there they give a description for you, of how it is supposed to be calculated as compensation, but I now sort of just want to write it to you, sort of, just so that you can see. So this value, we cannot now call it market value again, because, I mean, it's not. This value that is supposed to be just and equitable is then supposed to be market value, so that is still part of those relevant factors. So it's market value plus a current use value, and I'll tell you now what that is. Current use value those two divided by 2. I think the divided by 2 just wants an average sort of there. No. Divided by 2 and then minus this historical benefits, acquisition benefits, and state subsidies. And you see that's where these 5 factors are coming in again. State subsidies. This is how the calculation is going to look like. Christopher Gabor from the Office of the Valuer General, they have already done a roadshow like that. Unfortunately, I didn't go to that workshop. But this is what they were trying to sell to the valuers, okay, to sort of familiarize them with this idea. So you can see from a valuer's point of view, market value would not be too much of a problem. And they said, obviously, first price would be for comparable sales, that's just how we value farm and properties, is comparable sales. Hopefully or mostly, first price would be not where government was involved. Or otherwise, if the valuer could sort of prove, but yeah, those and those sales, even though it did go to government, it was still market related in terms of the open market. Because I think government has this idea that we are always overpaying, like this example. So, so market value, and then this current use value. Now people, this is going to be a huge problem for us as valuers, because that entails financial statements. Financial statements that the owner of this soon-to-be expropriated property needs to provide the valuer with. Okay, so one of the other problems that was also raised is that, again, unscrupulous people, what they will do is they will literally run this farm into the ground. Nee, if they now know intention, rumors that this is up for an expropriation, nee, to up this financial statements and up this current use value. Nee, because I mean, if that farm is, that land is being, what is it, destroyed or whatever, then I mean it's somebody else's problem after expropriation. So that was one of the concerns that was also raised, given this, you know, there's always sort of good ideas, and then some people always find a loophole, you know, to get the best benefit from themselves, and tough is for the rest. Okay. So market value, with this market value, that will also entail to determine the value of current crop. No, that's not been harvested or so. That will be added in there. This is comes straight out of your financial statements, and usually you need to have, say, at least 3 years financial statements to just see where is this farm going. Is it going better every year? Is it doing the same? Things like that. Okay. Divided by 2, sort of just to get an average between the two, and then here you can see you have to subtract this historical acquisition benefits and state subsidies. Now people, where you are going to get that is the huge question at this stage.
And how long do you go back?
Yeah, that is the other question that they asked. And where's the sort of line drawn? Are we talking about relatively recent people? Are we talking what? Yeah, so that is the other one. But we'll talk about this some. I'm going to keep it here in a little bit more detail, because that is why the Property Valuation Act changed, because they had to incorporate this calculation in that act. Okay. Good, but yeah. So this is, and this is only also going to be incorporated into the bill. No. So that is probably also why the bill is still hanging a bit back, because the Office of the Valuer General and this Property Valuation Act is probably now sort of familiarizing people, you know, with everything before the bill arrives. Okay. So this is then. Yeah, I would say that is sort of perhaps in the wrong place, where I said the valuation is twofold here in this little summary note, and I said market value, and I gave you that little, was a little bit too excited about it, but so that is not part of the Constitution. No. That will probably be part of the expropriation bill. But this sum that I sort of summarized for you is actually described in the Property Valuation Act. Okay, so I think this one is a bit out of context here. But I mean, here you see it, and you now know at least how the calculation will work and what is needed to determine value at this stage. Okay. Good, people. So then we have the expropriation bill. There it says it's an exact repetition of the Constitution. No. In other words, section 12.1, it's probably just an equitable, and then section 2, section 12.5 of the 1975 Act was taken. That is those 7 rules or so, where compensation will not happen. So that will also be included in the expropriation bill. Where section 12.1 of the expropriation bill is then probably this current use and what was the history of the property. Those 5 factors. Okay, so there's like 5 factors, and then there's those rules as well. So make sure you know which is which. Okay, so that is sort of a summary, people, just sort of to align these two clashing very important documents that we have, the Expropriation Act and the Constitution. That will sort of be brought together, brought in line with each other by means of the expropriation bill that we are still awaiting. I think it's at the National Council of Provinces, it's still hanging around, and they are sorting that out. Okay, people, so then we got In 1994, number 17 of 2014, 17 of 2014, the Property Valuation Act came into being, and that was specifically amended and changed so that they could bring the office of the Valuer General into the South African property context. Okay, have a look here. Here they give us a description, what is current use value. And I didn't want to burden you with some more stuff, but what was very interesting is when they send out these regulations, they asked for comments from valuers. You know, and it was quite insightful where valuers said every time they wanted to bring these regulations back to the international valuation standards. You know, they said don't invent new terms. There is already a term and there's a definition for that term. Rather go back to that. No. So they said there was current use is used, but there's no such thing as current use value. You know, that's sort of a new term. And according to this act, current use value means the net present value as at the date of valuation of cash inflows or other benefits that the subject property generate, and without regards to its highest and best use or the monetary amount that might be realized upon its sale. So that would now be, as I see it, that is where this income statement comes in, where this monetary flow of the books can be picked up. But I must say, after all these years, I'm not very conversant with financial statements. You know, it makes me a bit nervous. Okay, there they again give us highest and best use, but you see, highest and best use, it looks sort of familiar, but why could they not just use the International Valuation Standards definition? Okay. Good, then we also have there a net present value, so that is just the difference between your present value of your cash inflows and then minus the present value of your cash outflows or other costs. Okay. Go through that. There's also a valuation certificate, meaning a summary valuation report containing the description of the subject property, the current use value, there it is again, the value of acquisition benefits accruing to the owner, the market value. So here it is, all of these sort of summarized probably into a first page or so. Okay. Also including the identity and the registration status of the authorized valuer. Okay. Here it is, people, section 2, the powers of the Valuer General. So here you can see where they sort of established this Valuer General. And I think the office is now in operation for, say, I don't think it's even 2 years yet. Okay. So here it says that Valuer General has the power to establish and maintain a database of property and land market values. So hopefully over time, that will get easier and easier to do evaluation.
Will you, like with a land survey, if you draw up a diagram, you have to submit it to the Surveyor General and then he will approve it?
Yeah. Will
it later become that before you can give your client the report, the Valuer General will...
Well, the government will not be able to make an offer of compensation without the input of the Valuer General.
Okay, so the Valuer General is mainly there for compensation.
That's right. Yeah, that's right. Obviously also where government is buying some other land, but mainly for expropriation. And so the government or whoever is doing the negotiation will not be able to offer more than what the Valuer General got from either a private valuer that he appointed or over time his own valuers. That will be the maximum price that government will be offering. Okay. Obviously there will be nothing wrong with for the farmer or the owner of that property to get his own valuer in there. And then
if I ask you to value my house, it will have nothing to do with the
But no,
Value.
nothing. No. Well, yeah, no, I see what you're saying. No, he's just with expropriation properties or where government is involved in property. Yeah.
So you won't really be able to build up a proper.
That is what they probably said, because the next one says request a person or body to disclose either orally or in writing any information that may be relevant for inclusion in the database. Yeah. So they might, for all we know, say all valuers have to submit data for the last 5 years or whatever. Who knows? Yeah. So yeah, it can probably happen that they can make a request like that. And then also it says here, because it's a government department, you might over time also be able to perhaps buy information from them. You know, if you're a valuer and you're in need of some information, they say either raw or in processed form there. So that will be available there, and the Valuer General will decide what information will be included in this database, and then people, they will require the owner to provide for the authorized valuer, and it's a long list of stuff, people. Look there. And over. Purchase price and purchase date. Some of these things, I mean, you have lying around there. Nature of right transferred, freehold or whatever. Purchase and acquisition cost. That's probably also somewhere in a tin or whatever, an envelope somewhere. Financial statements. Itemized annual revenues and expenses. Then here's probably the lease agreement if you added any tenancy details. Capital and maintenance cost. You can see this is stuff where the farming operation is like a business, where all of these things are already sort of kept up to date by a third person, I would think, like an auditor or so. Then here it is, dates of completion of building works and copies of building plans. Details of any acquisition benefits. So who knows? For all we know, perhaps you still have some old land bank statements or whatever, And details of any direct state investment and subsidy. So obviously they will then try to get the information from the owner first. But here's even the third one is discount rate and cap rate. I mean, that is not necessary.
How can you ask that for the guy? I mean, that's going to have a huge impact on the current use value.
Yeah. And I think, I think the owner is not in a position to answer a question like that. That is sort of an investment question. So, but in any case, this will hopefully all be sorted out. Okay. Then obviously also you must make a date and a time to physically inspect the subject property. Okay. Good. Then we have procedures for valuations of property identified for purposes of land reform. Here again it says the valuer shall determine the current use value. There it is. Current use value from those financial statements. That you will have to come up to some current use value. Then the historical value of any acquisition benefits, and you have to escalate these values of these benefits to valuation date using an appropriate cost or price index. So some student in Pretoria suggested, I think you have something like, say, the agricultural food prices or something like that, that there's an index like that, So they'll probably sort that out over time as well. Because you are sitting with historical figures. If you get this historical figure from the owner, that you then bring that up to date to valuation date. Okay. He shall then determine the market value of the subject property as at valuation date, and also then looking at highest and best use. Okay. And there again is the rules, right here in the Property Valuation Act. Those 5 rules where you will not take, or in any case, I'm not saying 5, They have only 5 years, but we've just spoken about it, about the usefulness, no unlawful use will be compensated, and so forth. Okay, so those rules, again, just like that, as it was in the Expropriation Act, it's taken over and it's now part of the valuation, Property Valuation Act. Okay. Then, here it says about the valuer can take prices into consideration where government was involved there, but first price would be rather to get comparable sales without state involvement. Otherwise you can include it if you can show by your other comparables that government paid market-related prices in those instances. Okay. Then also he has to take that market value that he's now received in terms of comparable sales, and he will have to split those values in terms of what did he pay for movables and what was paid for the land, to have a split between those two components, which is, which will be a little bit difficult. And then here was something I didn't understand, perhaps you can help. The authorized valuer must include in the valuation report his use of prices paid by the state as evidence for market value as a departure. The authorized valuer must include in the valuation report his use of prices paid by the state as evidence for market value as a departure. Does that mean this is what government has paid for land, but it is it's an outlier. We usually talk about the outlier if the price is higher than sort of market. Is that what they with departure mean, an outlier? So I don't understand that sentence. Okay. Good. Again, he shall determine on valuation date this direct state investment and subsidies. So who knows where he will get it? Probably say something like land bank, Hopefully that information still exists. Again, how far are we going back in this regards and so forth. Okay. Where sufficient information exists, the value contemplated above, that is a direct state investment and subsidy, must be determined on the basis of current cost and then depreciated to reflect value as at the valuation date. So say for instance now, I wonder why they want it depreciated to valuation date. One would think that valuation date is sort of current. I can't think that you depreciate and then a year later you're only doing the valuation. Okay. But also the next one makes more sense where you have determined the historical cost of the state investment, and then you use an index to grow this to data valuation. So you had some state subsidies or whatever in 1990 or whatever, and now you use that index to grow it to see what would be the value of that subsidy today, to take that off your market value. Okay, so here people, in chapter 6, there is this little sum that I've now written out for you like this. There it says, adding the current use value and the market value of the subject property as a date of valuation, and dividing the resulting figure by 2. And there it says, provided that the value of movable property, annual crops or growing timber on the subject property that have not yet been harvested on date of valuation must be added to the market value. Okay. People, but why would there be movable property included? Why would you expropriate? Why would you take tractor worth or what? I can understand if they say the immovable property, but okay, the sheds and things, that's part of the market value, but that's determined by depreciated replacement cost. So that is added to your comparable sales valuation of the land. But movable property. Or perhaps you are expropriating like a working farm, a dairy. So then you perhaps want all of those, whatever installations it is, creamer and things like that, so perhaps in that sense, movable stuff. Okay. Good. Okay, so that is then added, all that sort of non-valuer stuff, is then added to the market value. Okay. Good. And then you do current use and divide it by 2. And then you subtract from this figure, you subtract this acquisition benefits and state subsidy. Learn that sentence by heart. Acquisition benefits and the value of direct state investment and subsidy in the acquisition and beneficial capital improvement of the subject property. You got a very low interest rate loan, and you could put in a state-of-the-art irrigation system or whatever. Okay. Good. So that is now this sort of section 6 explained like this. That's exactly what it says. Yeah. So in this instance, you can see it is full of, it's a lot of problems there, in terms of getting, if all of this is in place, that would probably, not be so difficult then. But to get the index can still be sourced from somewhere, sort of sort that out which index is most applicable to agricultural land. So that can definitely be sourced somewhere. But to get hold of the evidence somewhere.
The problem is also if that historical benefits, maybe it was 3 farmers previous than the current farmer, and when he bought the farm, he bought
at market. Yeah.
He had no benefits in that.
Exactly.
It was previous farmers, previous owners.
Exactly.
But now he's getting penalized.
Yeah.
But he paid.
He paid market. Yeah. I wonder if it will be applicable in such an instance, huh?
Yeah,
I must say I don't know the answer to that one. Is it just the original owner where this will? But government will probably feel no, but it's on this land that we spend the money. So we're not going to pay for it again. People, I'm telling you, I did a restitution claim. I've only done about 4 or 3 in all these years. And that was only in 1985. Now, 1985 for me is not so long ago. And believe it or not, nothing was digitalized. People literally, I remember, you had to send a handwritten letter to the typing pool, and they send you a letter back, and you signed it off. So there was nothing like desktop computers and things like that. So just to get that information, it took me like a month to do that valuation, because you literally had to go into the deeds office. You had to go flip through all those hard copy documents to get comparables and things like that, So that is 1985, so we're not even talking even further back still. We had to go to the archive. I must say you can do yourselves a favor and go there. It's really quite a stunning building. Yeah. Okay. But so interesting times. Okay, people, so here we see in 2014 we have this new Property Valuation Act, and it then paves the way for this Valuer General to appear. His office is established in I think it's Johannesburg, and he's obviously now setting up shop there. So over time we'll probably get to know a lot more about him. But so this is literally from the Office of the Valuer General. I've just, again, 4 pages or so, I've put there together, it's like newspaper articles. And obviously there is a lot, I won't call it prejudice, that's quite a strong word, but people are feeling that the valuer, of the Office of the Valuer General, is a government tool, you know, for the manipulation of land values. But obviously at this stage, I must say Christopher Gavor, who is our first Valuer General, he was the Director of Valuations here at the City of Cape Town, until 2 years or whatever ago when he got this post. So I mean, he knows what he's talking about with regards to valuations. But yeah, we will now see how they perform over time, but people are obviously feeling that that office will be biased towards government and not, you know, perhaps it won't be fair and or just and equitable. So they will still then need to prove themselves in that regard. Yeah, so you can just read through this. All of this coming into being because the Constitution spoke about public interest, and which has to do with restitution. Okay. Yeah, and as he's saying, you know, he is going to use obviously the normal valuation methodologies in his valuations. Yeah, there again he quotes the formula that I just gave you. He said here, current use value is not calculated in the same manner as productive value and is defined as the net present value of cash inflows or other benefits. The value will largely be based on the difference between market value and the income the property generates for the owner. Well, this is the guy that said, you know, you will now get unscrupulous owners, you know, that will now drive that land to its maximum for say 2-3 years until that expropriation comes through, and in that way you will have this long-term adverse effect on the land, you know, and then the next owner will now inherit this land, you know, that is that has got this deficiency sort of, and obviously that will also affect the long-term sustainability and the whole food. What is it always called? The food security. Yeah, security. That whole issue will then come to the fore as well. Yeah, where they say, you know, sometimes you will refrain from planting so that the soil will rest, or you will rotate your sheep or whatever, you know, so that you can give the veld a bit of a rest, you know, and only put them in back next year, and then you will decide, you know what, I'm buying as much sheep as I can and I'm going full steam ahead, you know. So which one can understand, that is how some people, farmers thus forego short-term productivity in favor of long-term sustainability. Okay. Yeah. Also, what he's saying here, this is what I'm not talking about, that that farmers rest some of the camps, you know, and so that overgrazing doesn't take place. So this should not be seen from government side as unproductivity. In other words, you can actually do more. Because if we then go towards that side, then that is where you have this total breakdown of your agricultural land, and all the negative effects that go with that. So it says, ironically, the net effect of this approach, of this current use value, could be to undermine land reform, because beneficiaries could be handicapped by receiving land that has been severely degraded or overgrazed by intensive use, and this should be avoided at all costs. So this guy, the third letter here in the Office of the Valuer General, he speaks specifically with regards to this current use. Okay, people, that is about my story for today. Does all of this, do you feel you are more into the picture now, the current picture? No.
So this will only be used for the current outstanding land claims issues that has not been resolved.
That's right.
That's currently it.
Yeah, that's
nothing,
it.
not anything else where this specific method will be used for now.
Yeah, no. This is only for restitution purposes. because the Constitution feels that we have to look at those 5 relevant factors, and bring that in, and market value cannot stand on its own. So this is where this is coming from. So as I'm saying, it's currently, or it was open for comments, and I must say the valuers, the comments that I've seen, you can see they literally took it sort of paragraph by paragraph, even correcting a spelling mistake here and there, something like that. So they applied their minds. Well, time will now tell, how much of that will be incorporated into the into this. But yeah, interesting times, and I think it will be a while before all of this is in place, for us to just extract that information, and lay our hands on things like that. Say for instance, even something like land bank, for all we know, they might have all those documents still in a safe somewhere, but to now scan all of that into a system, to make it available for valuers, that one
Job creation.
Absolutely, yeah, definitely. That's going to take some time.
So, just to get back, that's what we discussed today. These things are. What is that what we said was going to be 20 marks?
Let me just get my story straight. That will be, the bill, the restitution, the valuer general, and that is about 30 marks. 30, it's about 100 marks in all. So it's about 30 marks.
So the exam is 100 marks.
Yeah. So what we spoke about today is about 50 marks. Then the MPRA is another 20. That's up to 70. Performance is another 10, is 80. And the definitions and things like that is 90. So it can even be like 55%. So it's very important to me that you understand this whole expropriation, Constitution, bill, and also, these little hanger-oners that enabled our whole system to gear itself towards what because the spirit of the Constitution is restitution. That's why they brought in public interest. So it's important to me that you understand that. But as I said, I've sort of reduced most of the stuff to about 4 pages, so work through that. I've also put all of this stuff in a separate folder, so whatever's in there, make sure you know that. And then there should be no problems. Luckily, you have a lot of fat built into your year mark, so I can go in there with my red pen. Okay, people, that's it. Study hard, please, so that you can make marking easy for me, okay? All the best. Goodbye. Okay.
See if